Hello and welcome to the Look Ahead with me, Fiona Sincotta, Senior Market Analyst at City Index, looking ahead to tomorrow, Wednesday, the 22nd of January. So the little bit of a quieter economic calendar tomorrow. Focus will be on UK public sector net borrowing. We've also got ECB President Christine Lagarde speaking, and then earnings in the US continue coming in with Procter & Gamble and also Johnson & Johnson giving their updated numbers. Now, as far as economic data is concerned, as I said, UK public sector net borrowing, that's going to be very much in focus after we've had the period of concerns over the high level of UK government borrowing. But we're also going to be watching the sort of continued unfolding, if you like, of the Trump inauguration, the comments that he's been making, and also the actions that he's been taking, the executive orders that have been signed off. Now, this is just to have a look at the US dollar before we move any further. The US dollar really rose after the in the run up towards Trump's inauguration. It then has fallen off actually quite dramatically since his speech, which didn't really give the sense that he was coming in hard with aggressive trade tariffs. There's no mention of universal trade tariffs. And just broadly speaking, there have been a little bit of mixed messages, though, with regards to Canada, Mexico. China hasn't really been involved so far as comments from Trump are concerned with regards to trade tariffs, apart from he's going to be looking into it. So as a result, we've actually seen the US dollar fall quite sharply. Now we can see here, I mean, it's fallen out of that rising channel that it's been trading within since the end of September. Really, that long upper wick there suggests that there really is little demand up at those higher levels. So this is basically on the concept that if we're not having those aggressive trade tariffs, which were considered to be or are considered to be inflationary, that means that potentially maybe the Federal Reserve will be able to cut interest rates a little bit more aggressively than what the market had been pricing in as we sort of move towards the inauguration. Now, this is the pound US dollar. See, that fall in the US dollar that we've seen has really helped push cable back above that 123 level that it was sort of teetering around. We're still not really clearly out of the woods there as far as UK is concerned. We did have data as in last week, which highlighted the weakness in the UK economy. Then we had UK employment data today, with that actually unexpectedly ticked higher to 4.4%. We saw some weakening in the claimant count as well. That fell to the lowest level. Sorry, the payrolls levels fell to its lowest level since November 2020. And also job vacancies fell for a 30th straight month. So there are definitely signs of weakening in the UK jobs market. We have seen that the wages data actually showed an increase in acceleration in wage growth, but that's due to a base effect. So that's not really going to be affecting the Bank of England when they meet at the end of this month. As I said, just as far as this trade is concerned, we have seen that rise above 123, looking towards that 125 level. That's going to be the next level if we see a continued weakening in the US dollar, which does look like a possibility if we continue to hear sort of or we don't hear too much from Trump in the way of trade tariffs, or particularly universal trade tariffs or against China. So that's the pound US dollar. As I said, public sector net borrowing expected to come in at around 13.4 billion. If that comes in stronger than expected, we could see some weakening in sterling, just as it raises those concerns over the level of government borrowing in the UK, particularly given that borrowing costs were also proving to be relatively high for the UK government. Also, as I said, we'll be listening to a speech from ECB President Christine Lagarde. That comes ahead of the ECB interest rate decision later this month, where the central bank is expected to cut interest rates again by 25 basis points. Broadly speaking, everything's been sort of suggesting that they will go ahead with that. But there was some comments from Holzman, ECB policymaker, who actually said it wasn't a done deal. He does seem to be in the minority in saying that after the minutes to the ECB meeting last week also suggested that the rate cutting bias remains on track. As far as the DAX is concerned, DAX is trading around all-time high above that around that 21,000. This has been a strong recovery we've seen from that low of 19,800 at the beginning of January on that support zone there. Now it's risen, it's trading up here. We've got the RSI in overbought territory, so there is a potential to see some consolidation at these levels. And I think potentially we are seeing some caution in the markets as well, following Trump's inauguration, as sort of we wait to see what's going to be happening next. So it may struggle to push to fresh all-time highs right now. As I said, a period of consolidation on the lower levels. Watch out for 20,500. But it would take actually a move below this level here, the 19,800 support, to create a lower low. That would just a break below the 20,500 would just negate that near-term move higher. So also going to be watching out for the S&P 500 just with regards to everything that's going on. It's really interesting because it's just hovering around that 6,050 resistance zone of having recovered from the 2025 low around the 5,770. Again, we're seeing that sort of level of caution. I think we haven't really seen a strong rally in the S&P 500 since Trump has come to power, obviously today being the first day that the US stock markets were open. But we have seen a continued support of, if you like, and definitely not a falling lower in US stocks for the time being. They're just really in a bit of a wait and see mood as to what's going to happen as far as trade tariffs are concerned. Will we be expecting Trump to take a little bit more of a less aggressive approach, which, as we said, will give the Fed chance to continue to ease monetary policy as necessary? That would be supportive to US stocks, which, as we're heading, ramping up in earnings season as well, would be good news. Earnings, as I said, tomorrow we're expected to see from Johnson & Johnson and also Procter & Gamble. We've got Netflix will be released tonight after the market close. They're expected to show solid earnings growth and revenue growth. And just finally, the other one that I'm just keeping an eye on that here is gold, because interestingly we are seeing a little bit of a push higher in gold, benefiting from that weaker US dollar, benefiting from a little bit of that uncertainty. But we're back up to testing a pretty key level there at 2,750. If we can get above that, then that'll bring the all-time high of 2,790 back into play. We've risen above that falling trend line dating back to that all-time high at the end of October. We're also now back above that rising trend line dating back to the beginning of last year. So a fairly critical levels as far as gold is concerned. If we can get a real move above that 2750, that will put gold on a firmer footing. So that is everything that we have been watching. I hope that you've enjoyed what I've been saying, and I look forward to seeing you tomorrow.